Hey everyone, welcome back to the REI Marketing Secrets Podcast. Today on the show, we have Lauren Wells. Lauren is at the forefront of 7E's strategic market evaluation and implementation efforts, spearheading business strategies with a wealth of experience. With a robust background encompassing over a decade in business development, sales, and project management, Lauren plays a pivotal role in 7E's success. Before joining the company, Lauren served as a senior consultant with SaaS startups such as Procore and LinkedIn. Her expertise was instrumental in building and scaling sales organizations involving tasks like developing forecasts, defining target markets, identifying acquisition opportunities, and establishing new revenue streams. Beyond her corporate achievements, Lauren has been a seasoned real estate investor since 2010. Throughout this decade, she has actively contributed to the growing and managing a diverse portfolio of over 100 assets. This extensive portfolio includes both residential real estate and mortgage notes, showcasing Lauren's multifaceted skills and commitment to success in various domains. Lauren, excited to have you on the show today.
Yeah, I'm excited to be here and I love like your format of your podcast and kind of what it's all about because a little bit about me for anyone listening, like why should I trust this person? Where did she come from? I feel like I was in the looking for passive investment seat not too long ago. So now kind of flipping the script, being on the sponsor side, I have a big passion for the education on due diligence and just education on the asset class. So it's fun to kind of talk about all these things from the lens of like former Lauren, I guess you could say, corporate junkie Lauren.
Yeah, and super excited to have you on the show. And I know I found out about 70, gosh, maybe about a year ago, or I think it's been over a year now. I know Chris, the founder of the company, he was in, going all over Bigger Pockets forum, just talking about like helping out, folks that were interested in passive investing. And then that's how I came about finding 7E. I looked at the company. I was like, wow, you guys seem to be pretty good. At the time, I know the minimum was a little bit lower than what it is now. So that was like, I think your company was the first investment that I made. And, I think it was 500 back, way back when, and I think the distribution I get right now is like $3 or $4 a month. So nothing to, be able to quit my job or anything like that. But, it really opened the door for me to feel comfortable making another, 25, 50K investment into these other companies just off that small initial investment. But for those listening to us and are like, who's Lauren? Like, what's 7E? Like, what are you guys talking about? Do you mind just, going over, what the company does and who you are?
Yeah. So 7E is really just the brand. My business partner and our founder, Chris 70, it's a play on his last name. And Chris has been in the business in the mortgage note space for quite some time. And so, together we've launched a ton of other funds and 7E became the brand we were recognized with. Our current offering is under CWS. So it does get kind of confusing. We tried to rebrand as CWS and people were like, oh, is this a new company? So we're 7E and CWS together. What we do is pretty unique. How I like to put it is we fix and flip mortgage notes. So we buy mortgage notes, so secured by single family homes. So think of your mortgage you're paying. We assume that we become the bank. We buy them at a discount and off the secondary market, we rehab the borrower and then we sell them back on the secondary market for a profit. So in today's environment, it's actually an asset class that is doing really well. You'll probably even see if you were to look at any other marketing from other companies that debt funds are now like all the rage and out with equity offerings in with the debt funds. So we are a debt fund. We have been for, since our initiation or launch of all of our funds have always been debt funds. So we're a debt fund that offers our investors passive income to subsidize their lifestyle. And then what you said, Trevor, is super important, I feel. And one of the things, made me smile hearing you say is we have a Regulation A plus offering. And so what that means is we're qualified by the SEC to accept money from accredited and non-accredited investors. And as someone who, former Lauren, we'll call her, wasn't accredited, I wanted to have access to these investment offerings that didn't cost one, that didn't require me to be accredited, and two, that didn't require 25, 50, 100K, start. So the Reg A is, allows for that. We have a low minimum and we're accessible to anyone.
And I think that's excellent about the company. And I know I recommended a few folks from the LFI community, or for those listening from the left field investor community, over to your company, especially those that are under 35, as we run the group over there. And I think really what I really like about the company is just when I think about like the different capital stacks and like how can I protect myself in any sort of investment, your company comes straight to mind. Like as you mentioned, that debt fund, it just makes sense for me at this moment in time versus me going out and investing in, say, a multifamily deal where I could potentially lose everything. At least there's some sort of collateral going through your company. But with that said, why, sort of these mortgage notes instead of like going into an asset class like multifamily or self-storage or marinas or wine? There's so many different asset classes out there. What makes like mortgage notes special?
Yeah, so there's quite a few things. The first thing is the market size in comparison to the players in the game. So it's a $14 trillion market, mortgage notes, mortgages being originated every day. So there's a ton of opportunity and inventory. And then the second thing is, okay, you have all this inventory. Who are the players? You really have your BlackRocks, Blackstones, and then there's not really anyone servicing kind of they're, in the thousands, billions in AUM, but we're kind of that next level down. They're not dealing with, your investors off the street, so there's not many players, if any, that, we're really aware of that do what we do and what they do at a smaller scale. So you see people who do notes, but they originate, or they take on additional leverage, which pushes you further down the capital stack. So mortgage notes, like how I got into it was I don't want to rent property, or I don't want to own property because I don't want to deal with the whole, tenants, termites, and toilets, but I like real estate. How can I invest in real estate without becoming a landlord? And I was a crazy networker, still am. And I had someone much wiser than me tell me to look into mortgage notes. And that's kind of how I got into it. And, basically assumed becoming the bank where borrowers, instead of paying JP Morgan, would be paying, it was what was it at the time? Rincon Partners. So I'm sure maybe people listening, if you have a mortgage, you may have gotten a letter in the mail that said, hey, we sold your loan, make your payments instead of Chase to Bank of America. That's essentially what we do. We're buying those. We're sending you that letter and saying, hey, your payments now are going here. And, the way we do it is unique. And again, I really haven't come across any other funds who do what we do in the way that we do it. So the asset class, and even in today's economic environment, which, we could talk about for probably a whole hour, it's really a hidden gem in today's investment landscape because the mortgage notes are non-correlated to the stock market, interest rates, or real estate valuations. While other asset classes are really shedding losses, or you're seeing this like emergence of debt funds to, kind of make up for capital they can't get at 3% anymore, the defaulted note space or private credit or debt space, it really provides a unique opportunity for investors to achieve cash flow with lower volatility, which, everyone has their different thresholds, but for people who are looking to like test the waters and get started with how can I start getting some passive income, it's definitely a great place to start.
And I would say like looking at like volatility, you could think of like the multifamily space. There's been a number of syndicators within that space that have defaulted on their loans. Maybe they took on bridge debt or something similar to that, where I find the mortgage notes that's a lot more safer play. And I think, I'll have you go through and explain it. But one of the reasons, again, why I invested is I like the monthly distributions. It's not quarterly. It's not a developmental deal where maybe I'm waiting a year, maybe I'm waiting 2 years on my money. I'd love for you just to talk about, let's say someone comes in, they invest. What does it look like, on the monthly distribution? Is it monthly? Is it quarterly? Is it 6%, 10%? Love for you to share that information with our audience.
Yeah, definitely. So we have an 8% return with the ability to get bonus shares. So how it really works is just like you said, we provide monthly, our goal was monthly income to subsidize people's ever more expensive lifestyles as we are seeing with just inflation and everything else, or subsidize their retirement. So what we did is essentially for investors, for example, who were to invest by the end of January, their interest on their investment would start accruing February 1st, and they'd receive their first dividend check in the mail on March 1st. So it's a really quick turnaround. We're putting this money to work. We can't keep it in-house long enough because there's so many opportunities that we're getting, so many deals coming our way. And then you're getting 8% annually, paid monthly. And then to add to that, and I think this is something that people forget because people are saying, oh, I can put money in a high yield savings account. Yes, you totally can. You can get maybe 4, maybe 5%. But high yield savings income is taxed as interest income. So you're paying ordinary income tax on that money you gain versus with our fund, it's a dividend. So you're going to get a qualified dividend. It's a 1099 dividend form, which is taxed as long-term capital gains. And you obviously, I'm not an accountant or a CPA, so check with your advisor to make sure how that would impact you. Total disclaimer there. But it's lower than your ordinary income, regardless of where you'd be. So there's that small tax alpha, as we like to call it. You're getting that 8%, maybe more if you qualify for bonus shares, depending on the amount of investment. And again, it was really to give people the opportunity to see what, everyone always talks about: passive income, monthly cash flow. But when you think of that, I feel like a lot of people default to, I have to actually own the property, or I have to buy rentals or Airbnb. And that's not passive. You and I both know this. That's definitely very active. So it's truly a passive income play for those who are looking, want to test the waters again with something that, if this is new to them, with people who are maybe looking to subsidize retirement, have a self-directed IRA account, or people who are looking like me or my counterparts to subsidize daycare.
Yeah, I can definitely agree with you there on that daycare cost. I know as we were speaking earlier, Lauren and I, my daycare cost went up 30% at the start of the new year. So that was lovely, but that's the cost of owning a kid and all the joys that come with that. But with that said, I can attest to, investing with your company and getting that distribution first of the month, no questions asked, very consistent. And again, I think I've been investing with your company about 15 months now. So, I'd assume that operations will continue to be smooth in the future. So for anyone listening to the audience, it's been great. Some of these sponsors I've invested with, sometimes you get the distribution. Sometimes it might be on the 10th of the month. Sometimes it might be the 15th, the 20th. It could totally be all over the map. So I really like that aspect of it where it's been very consistent. But let's say you have these mortgage notes, you and Chris per se, and you want to go out and find these investors. How have you been able to bring investors into your fund? Have you been going out on, podcasts similar to mine? Is it Chris going out and just laying the groundwork on Bigger Pockets? Just curious what the marketing strategy behind the company has been.
Yeah, multifaceted, we'll say that. So really, when we started out, and one thing we continue to do today is there's a lot of education. I think what we realized early on was mortgage notes isn't super sexy. It's not multifamily. It's not a development deal. People are like, what are you even doing? They've never heard of it. Once we explain it, it's a very simple concept to understand. So really for us, getting new investors has come by way of just educating. So Chris, as you mentioned, is I think the number one contributor on Bigger Pockets. So he is all over Bigger Pockets. Myself, I'm attending conferences. We're working actually with both kind of two arms of capital raising. So because we're Reg A, we can market to anyone. So we've utilized LinkedIn. We can really accept funds from anyone and market however we want to anyone, obviously without providing guarantees. So LinkedIn, podcasts, our own internal webinars, growing our email list, like you said, Bigger Pockets. And then growing our brand as well, not only on the retail side, to individual investors, but also, we're kind of we made the jump into what like I would call the big leagues, where we're now working with financial advisors. We're getting on the Schwab platform probably by the end of this month. It's January. So now instead of us having to go to you, an individual investor, you can say, hey, I don't really know who you are. Can I talk to my financial advisor about this? And if we're approved by their broker, they can invest with your qualified funds. You have another layer of due diligence. You have this like assurance that, Schwab or Fidelity or one of the bigger brokerages has basically said like, these are not crooks. We've done background checks. There's just another layer of due diligence that I feel like has added credibility, not only on the broker dealer side, but also on the retail investor side. So I think really just like growing, not really pushing it. We do, promote the fund, but I think a big part of it is just talking to people and getting on their level and building that trust that, you're not a crook. You're going to be transparent with them. And that's something that we focus on a lot. And I mean, hopefully you see it as an investor is the distributions on time. We do quarterly updates, but we also send out weekly case studies because it is a unique asset class. You're not investing in one property. You're investing in a portfolio of, at this point, just under 100 notes. And so how do we continue to give our investors and even potential investors updates on case studies, wins, things, evaluations we decided to pass on? I think it's important to I always try to put on my investor hat, my 10 years ago Lauren investor hat. What would I want to see if I was scared to make an investment and didn't know who Lauren Wells, 70, CWS, or Mortgage Notes was? Where would I want to start? So I think a big part of our marketing effort has been wearing that hat and speaking to those audiences. And then Chris and I have very different voices, so we attract very different people.
That's awesome though, being able to go out and get featured on like Schwab and have like that potentially to invest with you. I know when I was back, I worked at Fidelity for a little bit. I wouldn't say worked, I interned there, but I had some family members that worked there for a long time. It seems that these big financial institutions are finally starting to get around to some of these alternative investments where for the longest time, it was just, investing through their mutual funds, their index funds, or it started off mutual funds, and then we went to those index funds, those low cost, and then became the trade, that sort of trade-off. So it's great to see that they're extending this arm of potentially these mortgage notes. And like you mentioned, it may not be like the most sexy investment. You could look at a development deal or multifamily, and potentially you could, let's say 2 or 3 extra money in 5 years. But what I like about mortgage notes is it's just a safer play. There's not as much volatility that comes into it. I'm not trying to hit a grand slam when it comes to my investments. I'm trying to hit, 10 different singles, that all are paying me, say, even 10%, annually would be really nice, but 8 to 9%. And I know that it's coming in, I like it maybe, you triple net leases, but there's still that aspect of what happens if the tenant moves out and it's just like a single asset fund or single asset and not a fund model. So I think there's all these ups and downs where I find with mortgage notes, it seems to be the clear sort of winner. And I can attest to that as part of the LFI community and talking to different folks. It's an asset class that people are getting very excited about, where again, people thought, how do I get into it? Do I have to, go buy someone's mortgage on like the court house steps and different things like that. So it seems as though your company just makes it a lot easier than that. But let's say someone is now listening to this podcast. This all sounds great. They go to your company, they request like more information. Now they're on, do you guys have investor calls with everyone? I know it's not a 506B or, it's not like, you have to have that pre-existing relationship as you mentioned, Reg A and 506C, but curious what that looks like. Is it just, again, just educating that person on the call and then potentially, adding them to your email list and then, sending them these case studies, and then maybe after a couple of months they become they invest with your company? Just curious what that sort of process looks like.
Yeah. So with us, again, because we're Reg A, we can speak with anybody. So we have a team of investor relations associates, and you can go to our website, learn about, there's an offering page, and you can actually schedule a call with someone on our team. You're able to book with them and ask questions about the offering, learn more about who we are, what we do, get added to our email list. And then because the big gap is really like, oh, I like these people, but then it's about the strategy. I want to know more about the strategy. So we do, again, have a ton of resources. I think sometimes it's like overwhelming because we have so much education. So what we've done is we really have curated these specific pieces for people who are looking to learn more, even if they don't want to talk to us. If you go to our website and you're like, I'm not ready to talk to them, I don't even know what they do. We have our 3-minute explainer video, and then we have a resource you can download to learn more. We have the webinars. Typically those then get people to say, most of the people I'd say that call or schedule calls with us that are serious investors have watched a webinar, seen the explainer video, been on our email list, and they just have some few questions to follow up and want to actually speak to a human being. So we really pride ourselves on having an actual person available to speak and answering your questions and kind of guiding you through the whole process from investing and then even onboarding as an investor as well.
That's awesome. And I know, again, investing with your company, I know you guys made it super easy to onboard. And if I had any questions, you would reach out. So that was definitely super helpful. But I don't want to take up too much of your time, Lauren. And the last question I wanted to ask you of the day is, if our audience is interested in learning more about you or about your company, where should they go to?
Yeah, so if you're interested in learning more about us, you can go to, or our offering or our team, you can go to 7einvestments.com, and that's the number 7, letter E, investments.com. There you'll find all the resources you could possibly ever want, including, different materials on evaluating a sponsor. So there's educating, but there's also educating on things you should be asking. So you can go there. You can also, and I always put this out just to see, do people actually email me directly? You can email myself at lauren@7einvestments.com or follow me on LinkedIn, and it's Lauren Wells. And those are the places you'd probably want to go to check us out.
Awesome. I'll make sure to include that in the show notes of today's episode. But Lauren, again, just wanted to thank you for coming on to the show today.
Yeah. Thanks so much, Trevor. Excited to be here. And thanks everyone for listening.